right, so I'm going to review my trades from this morning of my AMP account. Before we do that, we took a demo account, paper trade here, run up. Uh, we have like these ties up here. We got out. I was like, all right, we're gonna go short now because we are in premium. Fair value gap here, and then we were slow to pull the trigger on our top step account. Then we ended up getting it here, and then we ran up, and I got out, got back in and took it up here for a $1,000 profit, which corrected the drawdown of 500 bucks. So we're at like 5,000 or 50,500. What we're looking at here is my app account. So this is not impressive. We saw that we're moving up higher and we got overzealous and said, hey, we're gonna continue to move up higher. The risk to reward ratio of this here is not the best. So we're looking at 73.50. I had my stop loss right here at the mean threshold of this order block here, right? And you might be asking, like, put this in context, right? So here's stage one, 9:30 open. Stage two, that's what gave me conviction at a. This is good order block two. Place to stop here. Price comes down from where we got in at, and we got in on the green candle going up. That's another thing that we have to learn not to do is you don't get in on the strength, you get in on the weakness. Or as ST says, you scale out. You sell into strength, and you scale out into weakness. So what is you scale in you scale out into strength and you buy into weakness. So given that we're in the market maker buy model, so got previous day highs, there is no reason for you to want to get in this play for a continuation. There's no projections to suggest that we're going to go higher. We look at this one here. Here's force standard deviation. T2.5 is here. It lines up nicely with the previous day high. So this is reversal. Do you expect to go up and down? No. What we have here is a high, low, higher, high. It's a bearish breaker. Stage three of the market maker sell model. I almost said force standard deviation was aligned with this 4 hour SIBI. Accumulation, manipulation, distribution. We weren't thinking that because we were caught up in the adrenaline rush of being right. And hey, now it's this time to add money to our app account. We're ready. That's fine. That's that's fine. That's how you should be thinking. This trade wasn't all too bad. Getting in here on the strength, not the best idea. It's best that you wait till you get as close to where price can retrace to as possible. And now she goes into a new quarter. Look, accumulation, manipulation, distribution. Anyways, not taking that trade. And I just want to get through this quickly so we can get up out of here and log out of this because I'm so tempted. And that's an indication of where we are. So we're working on that. Anyway, so I mean, where we went to here, I mean, it's not all too bad. I mean, this is what fucking 9 points. Our stop loss was at discount encroachment here. Ideally, it's at 10 points. So very close to being stopped out. So given that we were very close to being stopped out, we saw 13 points up here, and that's 27, $2,270. Like, man, it's gonna keep going higher and higher, higher. Only for it to retrace. And I'm like, okay, well, where can it go? Right here, well, shit, man. 10 points, you're damn near close to hitting that. So just hold on, let's see if this is gonna work. Glad we did that. It did. Only for us to just break even because we were just mentally exhausted, right? We broke even this candle here at 75.25, right here. That's 1.75. That's breaking even. That's like $30. That covers the commission cost for that trade. Really covers the commission cost for like three trades. And it's scalping. And you can make a living off of doing that. But once you get to like 60 trades, it's gonna be expensive. Um, had we held on, we would have run up here, come back, run up here, come back down here, right? And this would have scared us. But this goes to mean threshold or cosmic crush by this wick here. This wick that went into this bullish shorter block here, right? And now we start our last leg of distribution or accumulation, and we go to Civi here. This here is a two to one risk ratio in discount or in premium. Ideally, where we got in for a short here is where we're supposed to get in for a call. Why? Because this is optical trade entry. From here to here, this optical trade entry. And here you have a 21 to 1. You could go to these lows down here. Or the low of this bullshit block right here. This is a 4 to 1 risk reward ratio. And ideally, it's right here. 3 to 1. 68 points. See that? Not 68. In total, 68. But this is 52 points. Not bad. So, given that we got out. Thank God. Thank God. Now it's alright. Alright, man. Run up, down, showing weakness. Run up, down. Alright. Now we have a thick black bar here coming into Q3. Q3 is for reversal. Yes, but you need to set up to confirm your reversal. So we got in here at 69.50. And where's your stop loss gonna go? Where's your stop loss gonna go? Oh, 10 points. Here's 10 points. Why wouldn't it hit the 10 points? What is this here? Simple shorter blocks. You see a breaker? You see a high, low, high, high? No. And where are we coming down to? Customer crush from this wick here. Which what? Hit bull shorter block here. Close above it. Push on weakness, on weakness. And where do you want to take this down to? These lows down here. Not bad. What is this? 105? Could be better. Could be better. 54 points. 5 to 1. Yeah, it could be better, but we end up coming all the way up here. And we held and held and held and held and held. Damn near $600 in arrears. $600 a drawdown. Scary, scary, scary business, right? So we ended up holding, 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 which, this is a form of practicing patience and being mindful and staying calm under pressure. Only for us to run over here at break even and buying it at 67.75. 67.75. Oh, how many points is this? 1.5. Again, another break even trade. Look at the risk to reward ratio on this. Risk reward ratio. Horrible. Look at this. Boom. and it's a 15-minute play. We're coming for these lows down here. The mark was being a, see what SAT means by jealous girlfriend or a lover that's, being a bitch. It's like, come on, you know you want to come down here. No, I'm gonna go up here. Go way all the way up here. For what? The fuck for? And come back down. Go up, no, no. So what the fuck? Just go straight to your draw. I mean, that's what I had here. Anyways, so we got it here. So happy that we came back down to break even and we got out prematurely. See, 67 got out here in this candle here, like right here. We go down. Okay, go, okay. Drawing liquidity here, by the way, or market structure shift here. All right, so it's expected that we move back up. So, all right, cool, cool, cool. Leave my stop loss right here. Let go to button trace. Did it. Boom. All right. Oh, saved. Only for it to hit at, or for us to buy at 67.75. Then for us to do what? Go in for another short position here at 55, 75. It's like what? It's still going up? Still, I mean, excuse me, it's still going down? Where's your stop loss? Right here. How many points is this? 14 points. No, it's supposed to be 10. It's supposed to be here. But look, let's just say that we were still here. I mean, this is where we were. We just went right back. We went right back to where we got in at. See, the high here is 70.25, and here we have 67.75. I mean, you only went up 3 points, so where you got in at, you can't experience a 3 point drawdown when trading. How I'm trading, the amount of funds I have, 3 points, $60. That's a shitload of money because we're only 40 points away from $100. And taking commissions on other trades, that gives us less than 9, 8 trades to take. But that's all you need. You need to be like batter's average to get $1,000 point move, $600 point move. That's fine. Um, but yeah, so we got in there and then we sold at 7.25. So this was not too bad. We sold on the retracement. Price retraced up, boom, hit it, cool. But these were our ultimate targets right here. And I moved my stop loss to way down here. I'm gonna take profit to way down here. No, keep it here. Again, you're only trading with one contract. If you had more than one contract, this is where your first takeoff will be. First partial. Second. And this is where your stop loss will be. So this risk reward ratio, mention the whole thing, is just 2 to 1. Much, 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 much better. Assuming that we were in on this trade, and the thing is, Trace, like, if you're going to be in on a trade and have a tight stop loss and it gets hit and it continues going in a direction, fuck it, you missed the train. Because we put ourselves in a lot of stress here. Another 14.5. Like now we're developing scar tissue and experience that is not rewarding. It's 200, it's almost $300 here. But here it is, 56. If we were to take it all the way down here, almost a 3 to 1 ratio. Not bad. Not bad at all. But the ultimate risk reward ratio is here. So in an ideal world, it's understand that, hey, market maker model, draw on liquidity, stage 3, manipulation leg, accumulation, manipulation, distribution, Q3 reversal. Wonderful. Draw on liquidity here, market structure shift here, ideally down here or here. Boom, take that, run up into it, and you're actually like, how high are we gonna go? Because we want to get on this trade. Um, let's look at this one. So, oh, I'm gonna get up here. Nope, we ain't go all the way up there. High, low, high, high. Bird shoulder block here. Bird breaker here. 50% here. Do we go up there? Nope, we ain't go up there. That this one run away from us very quickly. Very quickly. Here's a better view of it. Draw here. See, look how we have run down here. Accumulation. Run up. Stage one. Run up. Accumulation. Boom. Measure this. And again, this is hindsight. And what we're doing here is something that we have to do prior to this even happening. We go to 1.5. Perfect. And we can look at this one here. It goes to 1. Look at this one here. 1.5. Ideally, the one that you want to look at is this one here. The one before the fair value gap form, expansion leg form out of the accumulation, right? One could always say here, boom, look at this. I have to go trade entry. Um, see, I have to go trade entry. Boom. Run up. Stage one. Run up. Stage two. Boom. Get rid of that. Here to here. Uh, 2, 2.5. Notice how that lines up with this higher time frame objective. So reversal point. Get in here. Imagine that we got in here, right? Let's say we got in like at 2 right here. And our stop loss is 10 points. And you could do this for like your turtle soups, right? If you know you're in stage 3 on the 1, and then you have optical trade entry here, stage 1. We gotta look at this accumulation, manipulation, distribution. Boom, stage 1. Boom, stage 2. Pull short block here. Run up, accumulation. Some could say stage 3. Accumulation, accumulation, accumulation. But this one is a good one, as well as this one here. This orbly auto lock here is a good one. 1.5 um, is where we can expect the manipulation leg to go, only for us to come down. So this is accumulation, manipulation. 2.5 is where we can see a reversal. Um, and then, taking the last one, I prefer this one. Oh, nice. So they're all relatively within the same ballpark. And they're all pointing at the low of this higher time frame SIBI. And then we have this OB down here, 3.5 for reversal. And why this one? This is from stage 1 from the 9:30 open. 2.5, you expect a reversal. Bull shorter block here is holding, so that reversal is canceled. We're still going up higher. And look where we go to. It's perfect. So when we got in here, higher time frame, and then this is market maker model, buy model, manipulation leg, and we come down here, 80 points. So coming in on this is saying I have this as a target, potentially this as a target. I think that this is our market maker model here, our buy model here. And for standard deviations up here, aligned with our higher time frame objective, point of interest, and I want to measure in the third stage or an accumulation phase our order blocks to see if we have any confluencies up here. If we do, and I'm gonna take the turtle soup trade up here and possibly risk 10 points to get 80 points. This is a 8-to-1 risk ratio. Perfect. And boom. Now look what happened. Now we get there. Okay. So that's how that works. And yeah, you're just keyed in on this here, but you have to take everything that's transpired from the past because the algorithm is constantly looking back and referencing data from the past. Sankofa. In order to go forward, you got to go backwards. And same thing as a trading. In order to go forward, you got to go backwards. Just do the same thing. Sankofa. And then boom, Merkshire Shafir, down, run up again. Nothing. Yeah, so this here would be very tough to catch. Very tough to catch. So this is the ideal setup for the morning, right? And again, here would be the ideal setup for the morning, playing it on both sides and taking this out to possibly four standard deviations up here. Here's the risk reward ratio, 8 to make 85. And we got it in down here in our demo account. It's even perfecter. Perfecter. I make up words now. It was perfecter than 100 points. So what do we do differently is understand, Tracy, when you're going down into a discount, especially into a discount, look to buy. Buy into weakness, sell into strength. Okay? Buy into weakness up here. We're weak because we're in premium, in our terminus. Sell into strength. Although reverse, it's sell into strength, buy into weakness because it's the opposite. We're shorting. So that's it. Um, I mean, our last trade here was this one right here, and then we're just looking where would have been the best place to get in, and there's no really good place on the 1 minute, and that's why we do this here. Nose over the market maker model, go down 1, 2, 3, 4, 5, 6, 7, quarterly shift here, um, projections up here, up here, up here, projections, and then we just turtle swoop it 10 points to come down here. Is that it? That's it. So we ended up buying like over here. So we got 25. This I can live with because, you know, although, boom, we got to take it out here. If we had him runners again, he can go all the way down there. But this trade is kind of scary. But hey, pay the bills. And yeah, that's it. So it's at 67.25, 67.75. That's what we bought at, but we sold at 55 here, right? And so this was a 2-to-1 risk reward ratio. Coming down here, this would have been a 3-to-1 risk reward ratio. Decent, but it was 2-to-1. Um, we made about $600 on this. So 31 points, 600 bucks. Not bad. And as you can see, we did not take any more trades. Looking at this, this is just chop shop city. You're just better off waiting to quarter shift, which we get here, then down. So, um, is there anything in here that I can testify and say that I would take? Maybe this return up here. have to try the entry. And I did take this in a demo account. Runs up to 771.5 coasts. Boom. So I did take this. I got out like I set myself up like here, some shit, or here. We end up taking out these lows. Wanted for these lows, but retrace back up. And then you're asking like, where do we retrace back up to? Almost 61%. So that's another thing here is if you're up here, you got a really good entry. It hasn't hit your target. It's retracing back up. It's okay. Let's say we got it up here. You set your stop loss here, although it's not 10 points, but I'm just saying, like here, this is a 3-to-1 risk to reward ratio. You get stopped out at 71 points, 17 points. But down here, before we get there, this is a 8-to-4, 8-to-1 risk reward ratio, right? And this is 57 points. From here to here, 57 points. I would have taken that. Or we could have waited to get all the way down here. This is 80 points. So constantly, we see every day, at least right now, run up 80 points, down 80 points, up. I didn't take this going up, but going back down another 50 to 80 points. Okay. Other than that, good job being disciplined. And until next time. Until next time. Be safe. Oh yeah, just